Hey everyone, welcome back to Corporate Decoder, the place where we take those super boring corporate reports and turn them into something you can actually understand. Today we are diving into the financial world of AEI Income and Growth Fund 25 LLC. Sounds exciting, right? Well, maybe not. But stick with me because we are going to see if this fund is actually growing or just putting on a good show. This fund is set up to buy commercial properties, like buildings with single stores as tenants, and then rent them out. They collect rent and eventually they hope to sell those properties for a profit. In 2022, they asked their investors if they should keep going for another 5 years or just sell everything. The investors didn't really agree either way, so the fund keeps operating. Let's see how that operation is doing by checking on their latest report. First up, the balance sheets as of the end of 2024 and 2023. It's like a financial snapshot showing what the company owns, assets, and what it owes, liabilities. The biggest thing they own is real estate, obviously. Their real estate investments are worth about $14.22 million at the end of 2024, down from $15.4 million the year before. On the other side, they have some bills to pay, about $491,000 in total current liabilities, meaning debts due within the year, which is down from $592,000. It means they're getting better at paying back their debts. Now let's jump to how they actually performed, which we can see in their statements of operations. Rental income is the main way they make money, and it went up slightly from $1.63 million to $1.66 million. It means they are making a little more money every year from their tenants. Now this is the bad part for 2023. They had a massive expense of $1.08 million because one of their properties lost value. It really brought down their profits. They sell properties sometimes too. In 2024, they made $711 on the sale of real estate. Not a lot, but it's better than a loss. Finally, from investments, they got almost $45,000. After all that, their net income, meaning profit after expenses, was about $669,000 for 2024. Not bad compared to 2023, when they actually lost almost $600,000. Next, let's go to the statement of cash flows, which tells us what's going on with the company's cash. From day-to-day business, they made over $1.3 million in cash in both 2024 and 2023. It means they have consistent operations in their business. From sales of properties, they actually got $406,000 in 2024, but in the year prior, they got $1.4 million. Then the company distributed the money back to the members, around $1.1 million on both years. The statement of changes in members' equity is about what investors, both the managers and the limited partners, put in and take out of the company. At the end of 2024, the limited members, which is almost everyone, had a total value of $15.4 million, which means around $400K was decreased. Alright, let's dig a bit into the notes. The notes contain way more detail. This company was set up to buy and lease commercial properties. AEI Fund Management XXI manages it, and that company is owned by someone else who is under the Patricia Johnson Credit Trust. So lots of levels of ownership going on here. One important accounting policy is about how they value the properties. When they buy properties, they have to decide how much of the price is for the land, the building, and the leases that come with it. They have guidelines that rent is recorded, and they are careful about who they rent it to. They depreciate their building assets straight line for a bit over 2 decades. Also important is that each property must comply with the law and must not hold any damage. Finally, at the end of 2023, they had one property measured that was being held for sale. Some of these properties are co-owned with related companies. The management company AEI gets reimbursed for its expenses. They have long-term leases under net leases, meaning tenants pay for some of the expenses too. All of the buildings they own are valued depending on how they are rented. You can go to page 33 to read. Page 34, they also break down the value of the leases. They estimate having $7.2 million of revenue in future rents. Page 36, their largest customers are Sterling Jewelers, PetSmart, Talacris Plasma, and Tractor Supply, who make up over 85% of the revenue. What happens if they all leave? Page 37, the way they pay investors is simple. Page 38, how the company reports income, which changes depending on how they report it for tax reasons. The company also states that they have effective control procedures, meaning they keep an eye on all transactions and are responsible. The interesting thing is that a lot of people working here are working at multiple roles, which might create a conflict of interest. Everyone is reporting what they have in the company. Page 46, the cost for audits have also went down. Good to see. And that's the end, so what's my take on all this? AEI Income and Growth Fund 25 LLC seems to be in a bit of a holding pattern. Rental income is inching up, but they are still very dependent on a few major tenants. If one of those big names decides to move out, it could really hurt. The one-time property value loss really shook things up in 2023, but they managed to bounce back in 2024. The fund's financial health seems okay, but the growth is slow. They are paying out distributions, so investors are getting some return, but it is not exactly setting the world on fire. One thing to watch is those related party transactions. It's not necessarily a bad thing, but it means you have to trust that the people in charge are making fair deals and not just benefiting their other businesses. In conclusion, AEI Income and Growth Fund 25 LLC is stable but not exactly thrilling. It's a slow and steady kind of investment. Whether that is good or bad depends on what you are looking for. If you like excitement and growth, this is probably not it. If you want steady income from real estate and are okay with a bit of complexity, this could be an alright fit. Thanks for watching, and if you found this breakdown helpful, give us a like, drop a comment, and subscribe for more corporate decoding.